and gentlemen, good day and welcome to the Kellton Tech Solutions Limited Q1 FY26 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star then 0 on your touchtone phone. I would like to thank you all for participating in the company's earnings call for the first quarter of the financial year 2026. Before we begin, I would like to mention a short cautionary statement. Some of the statements made in the today's con call may be forward-looking in nature, and such forward-looking statements are subject to risks and uncertainties which could cause actual results to differ from those anticipated. Such statements are based on management's belief as well as assumptions made from the information currently available to the management. Audience are cautioned not to place any undue reliance on these forward-looking statements in making any investment decision. The purpose of today's earnings conference call is purely to educate and bring awareness about the company's fundamental business and a financial quarter under review. I would now like to introduce you to the management participating with us in today's earnings call. We have with us today Mr. Niranjan Chintam, Chairman and Whole-Time Director, Mr. Karanjit Singh, Chief Executive Officer, and Mr. Srinivas Potluri, Chief Executive Officer from US. Thank you, and over to you, Mr. Niranjan Chintam, sir. Thank you, and over to you.
Thank you, Pallav. Good morning, good evening, wherever you are. Want to start off with the financial numbers, and then we'll talk about operational highlights. So, on a consolidated financial, we were happy to post 296 crores as the top line for Q1 FY26 with an EBITDA of 35 crores and a PAT of 22 crores. With the EBITDA percentage is 12.1% and the EPS stands at 2 rupees 32 paisa. The revenue growth shows about 12.8% on a year-on-year growth and a 3% growth on a quarter-on-quarter. And the EBITDA growth is 10.2% on a year-on-year growth with a PAT of 13.5% year-on-year growth. Now, on a standalone basis, we showed a top line of 53 crores, which is about 15.7% increase over the last quarter. Just want to caution here, this quarter reflected hardware sale. I think we announced this, the Oil India contract that we have won. There was a big hardware component to this quarter. Hence, you see an increase of this size, whereas the profitability has not increased. The reason for that is, typically in a hardware, the margins are lower compared to services. The EPS on a standalone basis we came up with is 28 paisa. With that, I want to hand over to Karanjit to talk about operational and customer wins. Karanjit, over to you.
Hello. Good evening, everyone, and thank you, Niranjan. So let me first give you a little bit of details on the client wins. So we had 3 significant client wins in this quarter. I'll speak a little bit about them. The first one is basically we partnered with a global beverages leader to implement a configuration compliance solution that will provide continuous monitoring and streamlined automation that will ensure regulatory adherence and operational control. So this was basically targeted towards improving their governance, the client's governance and audit readiness, and reducing the compliance risks. The second one is also something similar, but this is with a leading US health insurer to integrate their security center and deliver automated and scalable workflows that will again help with regulatory compliance and risk management. So this solution kind of enables real-time vulnerability detection, accelerates the incident response and strengthens the overall cybersecurity defenses. So these are two in that area. The third one is we've partnered with a premier Indian travel technology provider, and we are helping them with basically the back-end engineering, and this is pretty complex and high-end engineering. And this would also be back-end engineering on the agentic AI and AI-driven automation and workflows, as well as sort of streamlining their integration with MEDS and a couple of other integrations that they have. So these were the three significant wins for this quarter. Next, I'll just touch upon a little bit on the operational highlights. So the first one over there that I'd like to sort of mention is that we basically seamlessly migrated a mission-critical application for one of the world's largest agriculture and food production enterprises. So we moved them over, cut them over to a modern enterprise platform. And the key highlight here is that we did this while achieving zero downtime. So, of course, we worked very closely with the client's global teams. So this kind of really helps, showcases our expertise in executing complex, high-risk, migrations and uninterrupted operations through all of it all. The second one that I just wanted to mention was we were amongst a select group of organizations that were invited to a NATO-led conference in Finland, where we have a key project that we run for them. So where we presented this key project outcomes and also addressed the complex client challenges that we addressed under tight timelines. And this earned a lot of praise from the NATO representative for the clarity with which we did it and the professionalism. We've had a long-standing relationship with them, and of course there is a roadmap. We're working on the future roadmap as well. The third one is where we actually partnered with a Big Four firm. So this firm, for its ultimate client, was working on advanced agentic workflows and decision logic, and at the back end it is Kellton that sort of helped with developing and enhancing enhancements to a climate AI control tool. And the last one is something that Kellton has done on its own, which is about launching Kai. Kai is our enterprise-grade agentic AI platform. This platform is something that we've built, and it helps with autonomously managing workflows, approvals, actions across finance or operations or HR and support. So very typical of any agentic AI kind of a platform. And this, the good thing is that this platform can seamlessly integrate with enterprise systems and delivers intelligent and context-aware automation at scale that helps with accelerating client decisions, workflows, and of course, boosting their efficiency. So yeah, these were the things around the clients and operational highlights. Back to you, Niranjan.
Okay, thank you, Karanjit. Pallav, can you open up for questions, please?
Yes, sir. Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may please press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Ladies and gentlemen, to ask a question, please press star and 1 now. Participants who wish to ask questions may please press star and 1 at this time. participants who wish to ask questions may please press star and one at this time. The first question is on the line of Gaurav Shah from Harshad Gandhi Securities. Please go ahead.
Thanks for the opportunity, sir. So can you provide some color on the current business environment in the U.S. because of Trump and tariff issue and all that?
Sure, Gaurav. I'll give a very high level and then ask Srinivas Paturi, who's based out of US, to give you more color to that. So, Gaurav, think, currently, right, the tariffs that is happening is more on the goods side and not the services side. Okay? Yep. There is no impact directly to us, right? There is always going to be an indirect impact. The indirect impact is that, every customer is, being careful in how they spend the dollars. But what is helping us, Gaurav, is, unlike before, right, for the digital transformation, typically the digital transformation initiatives were either done by the IT people or, some, let's say, the digital officers kind of initiatives. Whereas the AI part is now driven from the C-suite. Okay, so that's the reason why we are seeing a lot of traction where the CEOs or the CXOs are asking questions: what is our AI strategy? How can we save money in or retain customers? How can I increase my profitability? All those things that, the CEOs are initiating. So we are in a good place where we are engaging directly with the C-suite. So that is helping us with, our revenue that we are seeing, and we are hoping that this is going to continue on. With that, I want to ask Srinivas Paturi, who's based out of US, to give you a little bit more color than what I just stated. Srini, can you take that, please?
Yeah. Thank you, Niranjan. Good morning, good evening, everyone. Like Niranjan mentioned, right, there is no direct impact of tariffs on the service side. But due to some of the uncertainty, as well as there is some amount of collateral uncertainty that is risen due to these tariff situations, and companies are holding back on their spend, waiting to see how this pans out. But like Niranjan said, right, it's a two-way street. Because of AI and because of some of the layoffs that have been happening here in the U.S. Due to the uncertainty, AI has taken a forefront role in trying to understand how to build efficiency. So we are engaging on the AI side with the C-suite and trying to build business on the AI side of the enterprise, and how it can be utilized for building efficiencies and growth in this uncertain environment. Right? So that's the key takeaway. Yes, there are pros and cons to this tariff, but I think looking at it from a perspective of revenue growth and business, I think a lot of this has got to do with initiatives that are being driven on the AI for enterprise.
Thank you, Srini.
Okay. Thanks a lot for this, and all the best.
Thank you.
Thank you.
Thank you, Gaurav.
Thank you, sir. The next question is from the line of Pratik Dedia, an individual investor. Please go ahead.
Hey, Pratik.
Hi. Thanks for the opportunity. I'm audible, right?
Yes, you are.
Okay. Yeah. So I wanted to check how are you classifying the AI revenue in terms of the segment? So I see the revenue mix, revenue segment in terms of consulting, enterprise, and digital transformation. That is one. And two, in terms of how are you looking at the incremental margins with implementation of agentic AI, and based on that, if I have any follow-ups, I'll check.
Okay. Thank you for the question, Pratik. Pratik, at this point, right, we have not, segmented out AI yet. Okay, probably in the next quarter or so, we will start looking at to reclassify our grouping and come up with an AI-only kind of revenue segment. We'll look at that and get back if there's a realistic way of doing it. Okay, that is one. Okay. Coming to your margin questions, right? Agentic AI initiatives are typically, right, the way we are approaching is use case by use case basis. So we are solving use cases one at a time for the customers, or multiple use cases in certain scenarios where they're saying, okay, hey, can you completely operationalize this particular the whole multiple use case scenario, and we are also engaging with the customer on that. So I cannot give you a clear-cut answer to what is the margin in that particular segment, if you want to call it, because we are not tracking that at this point.
Okay, got it. Fair enough. But from what I understand, in terms of whatever you shared from the investor presentation, these are more transformational in nature, that you're getting client wins in terms of implementing agentic AI. So I understand it would be difficult to put a number to it, but given the nature of the project that you're doing, would be helping you generate a lot more profit. Is that correct?
So there is an increase in profitability when we go with AI or AI-based solutions. Yes, there is an increase in profitability for sure. Yes.
Okay, got it. And how can you give some color in terms of project pipelines? Is there in terms of near term how things are looking, and what kind of long-term perspective? Probably 1 year, 2 year down the line, how do you see things?
See, at this point, right, we can only talk about our order book, right? I just want to make sure that, we clearly distinguish, our order book is looking around 10 months is what the order book is looking at, okay? So we are to be the segment-wise that the question might be, we will continue to improve upon the segmentation just as and when we can. But our hope is that we're going to get that going sooner than later. But before the end of the financial year is something that, we should be able to get that going. Okay?
Okay. All right.
Thank you.
Thank you, sir. Ladies and gentlemen, to ask a question, please press star and 1 now. Participants who wish to ask questions may please press star and 1 at this time. Ladies and gentlemen, to ask a question, please press star and 1 now. Participants who wish to ask questions may please press star and 1 at this time. Participants who wish to ask questions may please press star and 1 at this time. Ladies and gentlemen, to ask a question, please press star and 1 now.
Well, if there's nobody else, let's just close the call.
Okay, sir. As there are no further questions from the participants, I now hand the conference over to Mr. Niranjan, sir, for closing comments.
Thank you, everyone, for joining the call and your continued trust. I forgot to mention one thing. The earnings that we reported is on a 5 rupee face value and not the 1 rupee face value, that is the post-split one. So any numbers that we quoted is on the 5 rupees face value. Again, thank you for joining the call, and appreciate you joining. Looking forward to talking to you soon, either in the next earnings call or sooner if your paths come our way. Absolutely would love to meet and talk. Thank you. And thank you, Paula.
Thank you, sir. On behalf of Kellton Tech Solutions Limited, that concludes this conference call. Thank you for joining us, and you may now disconnect your line.